Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, March 11, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do you have on the docket today? Well, the first thing you'll notice in front of you is the black trend line where price bounced right off of it like it was a Super Bowl. We'll get to that later. We have more of the same in the big picture scenario. We have the tariff schmariff situation. We have the government shutdown situation. We have Ukraine, we have China, we have Canada, we have Mexico. We have all the same suspects, and nobody knows how the market works. Case in point, and I'm just picking this out because I found it today, Morgan Stanley's Wilson warns S&P 500 to sink 5% on growth risks. Now this came out yesterday. Where was he at the market top? I'll tell you where he was. Go back and do a Google search. Find out where Wilson was talking about while the market was making new highs. He wasn't talking about a 5% correction or a 10% correction. He was talking about which stocks are cheap and the market's going higher, higher, higher. These people know absolutely nothing. You can't listen to them. They're dumb as shit. They toe the party line. Stocks are cheap. You have to be bullish if you work at one of these firms. Otherwise, what happens? You get fired. Whether it's Morgan Stanley, UBS, Merrill Lynch, HSBC, Goldman Sachs, it doesn't matter. They're all the same. They parade them on TV, the unassuming public watches them on TV, and then they repeat what they say on TV. They think because these people are on TV or quoted in the news that they know what they're talking about. Mark my words, I've been doing this a long time. They don't know, repeat after me, shit. What we know is from a cycle perspective. We've been talking about it for 4 or 5 months. We're looking for a low in this time frame, in this period of time. By the way, you got 2 things working. There's more than 2, but I'm going to cite 2. First, we have the full-on lunar eclipse at the end of this week. That's item number 1. We've been talking about that for a while. Number 2, we were looking from a cycle perspective from a February-March low. We've gotten past February, so now we're into March. We're looking for a low. Guess what? What was 25 years ago to the month was the dot-com crash beginning. We had a market high in March of 2000, 25 years ago. It's an important anniversary. It's a quarter of a century. We call these semi-fat round numbers. Might want to write that down, put it on a sticky note. And then you would say, well, then you have a high in March of 2000. You should get another high in this month or another high because it's 25 years later. Not necessarily. What about what's called the law of alternation? Never heard of that? I made it up. The law of alternation is sometimes you'll get a high and the next thing on the anniversary will be a low. High to low, low to high, high to low, low to high, low to high, high to low. It's not always high to low, high to low, high to low. Capiche? So whether we're going to find a low on Friday, on Thursday, on Monday, we're looking for a low. How do we determine a low is in? What we're really looking for, and nothing's ever perfect, the market's not necessarily going to give us picture perfect. We're looking for a high volume reversal situation, a gap lower reversal on high volume, just a bludgeoning during the day, exhaustion candle, high volume. There's a number of things that we look for. Doesn't have to be all of them. It's going to be 1 or 2 of them. These are taught in the course MSF Masterclass series. Now, let's get to some numbers. Let's get to where that trend line came from. What happened inside the numbers today? And I can tell you with this without a shadow of a doubt, today was what we call in the live trading room and inside the numbers a bonanza day. What does that mean? It means a lot of traders made a shitload of money. Period. Full stop. We start out with a little tiny DCB or dead cat bounce when you wake up this morning. Today's pivot came in at 559.80. Let's start there. Below the pivot, she's bearish. Above the pivot, she can rally. You can see how she treats the pivot. Early in the morning, gave it up, tried to retest it, couldn't do it, just poked her head above by a couple of pennies, sold off again, came down toward and to the trend line. We'll get to that in a moment. Back to the pivot. You see this little back test here, looked like she was going to stay above. Then into the end of the day, gave up what we call as the ghost. Below the pivot, check this out. The door opens for a leg down, first towards yesterday's lows, and some unfinished business down around 554.40. Get out your sticky notes. 554.40. As you can see, 554.40 was one of our bonanza trades today. She came into it, ricocheted off of it, rode him back up to where? The pivot. What was an exit? an exit. The pivot. How you doing? Do the math on how many points that is. It's $5.40 in the spider or 54 S&P handles. Once again, how you doing? You like apples? You betcha. How about Macintosh? But wait, there's more. Of note, just below, that is a very long-term trend line we've discussed before, and today she comes in around 552, give or take. It's the give or take. Sometimes she comes up short, other times she spikes them through. When you look at the daily chart, you can see here, it looks like she hit it to the nose. You go down to a 5-minute chart, maybe a few cents short. Either way, 552, give or take. And what was low of day? How about 552.04? Once again, how you doing? 552, low of day, 552.02. Once again, how you doing? I got a lot of notes this afternoon from traders that took a trade long around that trend line. They had a nice, what's called a rocket ride up for what? About 100 S&P handles. Let me repeat that. 100 S&P handles. Here's an hourly chart. 100 S&P handles in less than 2 hours. How you doing? In the live room, we talk about where that trend line came from. We look at it specifically where it came from. I'm not going to do it here in the free video. You got to pay for that kind of information at this point. I'm starting to get out of the free business. Now, you saw most of the stuff already. What I did was highlight a few important things. What I urge you to do is pause the video, read the notes, go back to the chart, and double check the work. You see the numbers in here repeated over and over again. These are support numbers, they're resistance numbers, they're important numbers, they're magnetic numbers, they're numbers that represent what? A trade. Pause the video, read the notes, go back to the chart to double check the work. If you are or are interested in trading in the S&P, options on the S&P, futures on the S&P, micro contracts on the S&P, exchange traded products on the S&P, then this is a place for you. Why? Because we give you the S&P numbers. How you doing? Not only do we give you the S&P numbers, but what about all the other markets? We got the NASDAQ, the small caps, the bonds, we have semiconductors, we have GDX, which is the gold miners, we have crude oil, gold, silver, natural gas, the dollar, Bitcoin. We got them all. Question, reflect on this one. Where are you getting your numbers from? About the lazy swing trader automagical algo system. She's been on somewhat of a fire drill lately in a good way. She's on fire. So we had a short trade. That's good when the market's going down. We had a short trade in Cisco's systems. First profit target hit today. She's now a risk-free, emotionless trade. And what's interesting is just look at this objectively. $60.54 was the exit, and she came into the exit and bounced right up. How does she know that? Because it's an automagical algo system, algorithm, my algorithm, like none other, I assure you. What about the small cap space? Camp IWM, any material change today on the chart? Nah, she made a slight new low by a couple of pennies. Didn't finish at new lows, bounced them back. Is that a sign and or signal of a trend change? It can be. Remember, we're now in the camp where we start, and repeat after me, it's air quoted, we're looking for a low. Maybe a couple days early, but we're looking for a low. We're on the lookout. We're on the balcony looking out. Weekly chart, same routine, into the convergence of the 100 and 200 period moving average. You also have what? You have a big time breakup candle low. This is too long of a line. It also coincides with a big fat round number of 200. You have market symmetry. We got what's called the whole kit and caboodle. About the transports, getting bludgeoned today again, down 474 points, 3%. Are they throwing them up? Is this the beginning or in the middle of capitulation? That doesn't have to happen all in one day. I can assure you that a few days ago, and at least more than once, we talked about this area down here as market symmetry. She's below all the moving averages. The trend is your friend, but we talked about this area as market symmetry. Here's a monthly chart. Doesn't have to stop on a dime, but when you get into the camp of the area of market symmetry, you have to start paying attention. You have to start on the lookout for a turn. The transports is my second favorite market leading indicator next to Camp IWM, but a number one, what? Canary in the coal mine. If she turns before the rest of the market, we're going to be keenly interested. What about the Q people? Down $1 today, $1.13, 0.25%. No big deal. Again, made a new low, but also put in a sign and or signal of a trend change. We will note that it's a puzzle piece. It's now on the table. You'll also note that we have an on-time type of situation in the Qs, an on-time type of situation in the spiders. We have a sign or signal of a trend change. Don't be surprised if we see a turn. We're looking for a turn. XLF, similar theme. We have a new low today, didn't finish at a new low. Another on-time type of situation, completely different than the spiders, completely different than the Qs. It's got its own on-time type of situation. Of note, puzzle piece on the table. Weekly chart, what do we have? Big time breakup candle low, on-time type of situation from a daily chart. Might want to heed that information. Doesn't mean the market's going to turn tomorrow. It's just what we have. We take it at face value. Semi-space. Semis are a pretty good proxy for the tech space. And without the tech space, the market's going to get wiped out. SMH down 30 cents today. No big deal. Again, same routine. Coming into a big time breakup candle low, a little bit away from current price. 100 period moving average, a little bit away from current price. And another, from a daily chart perspective, on-time type of situation. Sign and or signal of a trend change. Do you see a common theme across some of the markets, many of the markets? The answer is yes, you do. Let's heed that information. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.